9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne with David Ingles.
We are cutting down to the open up markets in Greater China this Monday. Let's get to your top stories today. A extremely cautious start across markets today. December, of course, first trading session. You had factory activity coming out of China on the weekend, contracting for a record 8th month. We get a private gauge later this hour.
China's food delivery wars see Meituan posting its first loss in almost 3 years and a warning of further damage to come from the battle with Alibaba and JD.com.
Also ahead, China's property crisis in focus as Vanke's latest woes pressure offshore bonds, a delay to monthly sales data adding to some of the uncertainty out there. And as Hong Kong warns its fire victims, the government is warning of action against anyone deemed to be stoking unrest. Right, we're looking at some declines across these equity markets as we kick off a fresh trading month, fresh trading week. We're down about 1/3 of 1%. We are getting some fairly hefty pressure coming through across U.S. futures, not normally moving a lot, not to the extent at least we're seeing currently for this time of the session. We're looking at a lot of data coming through. We'll recap some of the PMI numbers we get from a whole slew of Asian economies. About 30 minutes back, we had the gauge, of course, coming out of China. We have a private gauge coming out this hour. On top of all that, other things on deck, risk aversion out there, 0.7 to 1% on the Korean markets. Right, dollar, U.S. 2-year yields were fully priced now for the Fed meeting, which is in about 10, 11 days or so. As it pertains to Japan, also on the monetary policy front, we now have a 1% handle for the first time in many, many, many years on the 2-year yield. We are expecting to hear from a central bank governor anytime now. We'll bring you the latest there once we have more information there. A focus specifically on metals today, silver and especially copper, with both, in fact, now trading at record highs. So we're looking at copper futures as well in Shanghai coming up on your screens very shortly. That should see a follow-through move following the move in London on the LME, at least 11.3 right now on copper there. The China one is coming online. Bitcoin obviously is pulling back 4.2%. I should also point out this broad wave of risk aversion was something we did not specifically wake up to, and it certainly just caught somewhat momentum in the last 60 minutes or so. A50 futures coming on your screens. Dollar China 200-week moving average. We'll get you a chart in a moment, but there we go. That's not the copper contract, but yes, we'll talk about the copper contract a bit later, and it's COA commodity. Anyway, let's have a look at other things on deck today.
Well, as you mentioned, I don't think we were foreseeing this sort of risk aversion, right? When we were talking about December was supposed to be that month where things are looking better, and that this pullback in November was maybe just a one-off. And now you're talking about the macros weakening again. When you take a look at the China PMI number and the 8th straight month of weakness that we've seen, you pair that with the Meituan earnings, you got to wonder, have we actually seen the peak of the intensity of these e-commerce price wars?
Yeah, you know, I'll throw in the resurgence of the property.
Vanke, yeah.
Vanke and the property wars, right? So we know a big part of the economy isn't doing well, and that's really shown up in the earnings story, right? The big tech plays that have a very big component to sort of B2B, like Alibaba, the cloud business is doing well, but the B2C business, Meituan, is almost purely a B2C business. It's really showed up in the form of earnings. So that's really something that we'll see today, and of course Meituan will be getting first reaction to the earnings coming through today. On top of that, monetary policy, that's just to say we mentioned this, we're up 1%. Likely, is that going to be a rate hike out of the BOJ? If not December, it's January, of course. Now, we're fully priced as far as the Fed is concerned in a couple of days now.
Yep, and we are seeing right now, it seems like the Bank of Japan Governor Ueda is speaking in Nagoya, so we'll bring you any sort of updates in case we do see that as well. In terms of your agenda for Greater China today, so we talked about, of course, the currency moves that we've seen when it comes to dollar China. The 200-week moving average is certainly one thing to watch very closely here. We have the RatingDog China PMI number coming out in the bottom of this hour as well. Still watching what's going on with Vanke, property bonds as well. We've been talking about some key sort of milestones that were hit here, and we're watching those high-yield spreads very closely. We talked about Meituan. When it comes to Jiangxi copper, there's a takeover sort of bid that they're talking about here as well, and Leapmotor as well we're focusing on. The property side certainly is still the struggling one that we're watching very closely in terms of fallout from Vanke, and of course casino revenue from Macau that's happening in November. The November numbers, I should say, are happening later on today as well.
Yeah, also retail sales out of Hong Kong. So yeah, lots to discuss going into the session today. Let's start things off with the earnings story, and the reason perhaps this is taking on slightly more significance, it's really a reflection of really a weak and soft spot of the Chinese economy, right? Meituan's first loss since 2022. Red bar is that operating loss, that almost 100% jump from this time last year of operating expenses underscores this intense competition that the company itself alluded to during the earnings release. Let's bring in Catherine Lim, our Bloomberg Intelligence senior analyst, joins us from Singapore today. Catherine, good morning. Your first thoughts when you had a look at these earnings coming through?
Yeah, morning. And really, I think other than the loss, one thing that stood out for me was that this was the first time that Meituan actually reported core local commerce revenues declined of 3%. And that really goes to show that it lost market share in the food delivery sector that contributed to the loss. I guess the reality is that they've guided on the loss. It didn't quite surprise me that, it was steeper than expected. And I think market was already expecting the losses to continue in fourth quarter. But, as they've highlighted, the competition is still intense. And, how rational it is going to be, they weren't able to actually really give, visibility or clarity to that. And really, it all goes down to, how the market sentiment's going to be. And to what you've also highlighted, earlier, David, Yvonne, that the underlying consumption sentiment in China is still fairly weak. So that really clouds the whole outlook in 2026. And that's going to take a hit, on the stock today.
Catherine, the consensus expectations is still for a turnaround for 2026. Do you think that's still feasible at this point, or is that going to have to be revised lower now?
I think the question really is that, what is the magnitude of that turnaround that we should be expecting in 2026? Is this a prolonged pain that we have seen in other sectors as well, not to name them? And, the question is, we know that they're not going to go back to, the 18% operating margins that they've done in the past, but is it fair to say that it's going to halve, or is it going to be worse than that? As Meituan, looks very determined to try to maintain their leadership in food delivery.
All right, Catherine, thank you. Catherine Lim there, Bloomberg Intelligence senior analyst, breaking down those Meituan earnings for us. And still ahead, we're going to take a closer look at China's tech sector as the AI wars heat up. And we're going to hear why Barclays Jiong Shao sees no bubble in the next few years, predicting strong progress in the likes of Alibaba and Tencent.
Yeah, suffice to say, we'll also get his thoughts on Meituan, if that wasn't obvious right now. 102 Hong Kong dollars a pop right now going into the open today. Maybe not. We won't be taking out the 100, but we'll see, of course, when things open here this Monday. Right. Now, our first guest on shows today thinks that China's tech sector, speaking of that broader theme, stands out as a top global opportunity going into next year. Joining us here on set, Eva Yi, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. Hope you're well. Let's start off on tech. We now have done with the earnings. This is a really good opportunity, you guys think. Tell us why.
Well, the result actually confirmed that the AI developments of China is actually exceed people's expectation. What I meant is not about capex. I think the U.S. tech developments clearly telling you that it's not about how much you spend. It's about how much you eventually can generate in terms of revenue. So if you look at the time lag between investments versus monetization, China actually have been doing better than that of U.S. if I would really have to be strictly comparing. Because remember in the second quarter results, Tencent, some of the leading portals already telling us how they use AI and generate better advertising revenues, how they use AI to generate or to help them in the gaming development. All this, I think it's crucial nowadays, moving forward. It's not about, like, we still have the capex spending. I know that one of the companies telling you that we have to revise down our third quarter or full year capex in AI, in chips in particular, because China is still, restricted in terms of importing chips from US. But that set alone, the another companies are telling you that, okay, this is our 3-year budget. We are able to spend it earlier than what we expect. So I think this is important that capex spending, okay, so broadly in line, but monetizations is actually far exceed people's expectation. I think that's a key message.
And the way that AI plays out regionally is very different, right? You talk about chips, it's Korea, it's Taiwan, Japan, it's equipment. But you're saying in China, this whole full stack sort of proposition, you say, is more attractive.
Yeah.
Okay.
Because it's like, yes, I mean, supply chain is important, but there is a certain level that China is still not able to deliver. But on the other hand, because the ecosystem, even before AI, they were very complete. So there are many AI use cases or scenario for them to benefit it from. So I think in US they do have it as well. Not every single company have some have more comprehensive, some have less. Then you now see the share price telling you that. But in China, I think there are 2 big ones, and maybe actually 4 big ones. 1 is unlisted, 3 are listed.
Yeah.
You sort of see them know, hey, I'm doing this, I'm working on this. And once you're on the track, you're only able to accelerate that because you already find cases and usage of AI.
One of our guests last week, speaking of the full stack and the whole supply chain that you have in China, almost across the board, with some gaps, of course, to your point, told us, like, the bull case seems clear, but the research coverage and sell-side coverage doesn't seem to be as comprehensive yet, looking at that full stack. And I wonder, is that a hindrance? Obviously, we'll get more coverage, but when you pitch the idea to global investors, how receptive are they when you go beyond, say, the top 5 names?
I mean, this is totally understanding, because when people talk about AI, people seems to be just pointing to 2 companies. But when you look at the through supply chain, exactly what your speaker is saying, there are a few of the, actually quite a big part of the supply chain. I'm talking about doing chips. They are actually in the, not even in CSI 300, they're probably in the 500 or some even in 1,000. But obviously not all companies are equal. I mean, there are some of the good ones that are able to manage, to do better and excel. And on top of that, the valuation, some of these companies' valuations are like 70 times. At one stage was 100 times for PER. You're like, oh, should I really look into it as an analyst? Should I, sort of put in the effort
to
look
matter?
into it? Exactly. Well, it will matter, but is it too early to look at it now? Yeah.
So you mentioned the optimism around AI. I mean, it seems like the macro is getting weaker, right? You look at PMI numbers, you look at what's going on in the property sector. Can I still just focus on tech for next year for this equity rally to continue?
Well, as we always say, the Wall Street versus Main Street, right? No matter which part of the world, we always have this dilemma. The Main Street, particular for China, you cannot have, for example, consumption continue to be weak, and you expect people would pay this money, in terms of AI or byproduct or like the second derivative of consumption, being AI. So we do need, a better, or at least, some of the structural issue need to be taken care of eventually, or else, purely relying on tech without the macro economy not doing well, it doesn't work.
One of the recommendations for the 2026 outlook is allocate up to 30% of equity portfolios to something related to AI.
Yeah.
Are there any changes to how you've observed people allocating this year that you think they should start entertaining as a new idea going into next year? Or is it more of the same?
Well, I think in terms of people that early in the US AI, they'll be quite concentrated on one company, probably. And we now, particularly over the last 3 months of share price performance, telling you that you should not do that. Like, we are already in the 4th year of the AI development in the US, diversification is crucial. And now you have not just GPU, you have TPU, you have different AI big model. The usage, the applications are very different. I think same case of China. You also need to think about how you diversified. And you maybe the timing, like now maybe I'm more in gaming because I worry about the food delivery platform still going to spend more money. You know, that sort of diversification is crucial in 2026.
Are there pockets of the tech space that you worry about? I mean, I think last week it was the regulators that said humanoid robots. They actually see that space being, a little bit too crowded. Are there parts that you look at and be like, I worry about this?
Well, whenever we are approaching a new sort of technology, humanoid is a good example. You always come to a stage that whether this company can survive. Okay, they talk about 100 robots being delivered this year, and then 10,000 next year. You know, that sort of jump. How's the sort of the entry barrier? Is it like? Hearing all the nice story, it's easy. But if you sort of dig in deep into whether you really have the edge and you're able to stop the new entrants coming in, I think that's crucial. We always come into a stage that there are too many entrants and only one or two able to survive.
We'll have more Eva Yi, of course, will be rejoining us in a couple of minutes there. She's been, of course, with UBS Global Wealth Chief Investment Office. Just to also mention, we just talked about Meituan as a starting point there. We spoke a little bit too early. After a couple of minutes, it does seem we will be trading, if not at, we'll be below 100 Hong Kong dollars right now, so we are indicated lower. Speaking of the 90s, that's also a level to watch when you look at copper in Shanghai. We're just getting warmed up, and we're now an inch or two from that 90,000 handle on the back of copper hitting a record, of course. Metals, of course, is something we're tracking going into the session.
So we're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong on this Monday morning. This is the China Show.
Welcome back. We'll take you straight now to Japan, where we are getting an ongoing live briefing out of the BOJ. Suffice to say, the comments that have come out so far are largely on the hawkish side. Nothing out of a complete vacuum, of course, but an indication that rates will likely head higher. Acknowledgement that real rate is very low. A hike would be an adjustment to a degree of easing. And if the economy outlook is realized, then the BOJ will be raising interest rates. Just to also say that the yen has strengthened since those comments dropped, and the two-year yield is now at about 1% for the first time, I believe, since 2000. And it's something to keep an eye on.
Yeah, and the fact that he's mentioned, right, FX is more likely to affect prices than before. The weakness in the currency is certainly one thing that, they are concerned about possibly stoking inflation further than it already is. Directly talking about the currency impacts that it could have. But he says to make the right decision when it comes to rates in that December meeting as well. But still, I think, I asked some of the economists, they're still kind of, maybe it's a bit of a coin toss at what point what they're going to do in December. But December and January certainly are live. And you're seeing that reflected in markets there. There you go. The yield curve is heading higher here this morning. The two-year yield about 1.01 there. And certainly we're watching that very closely, what happens there. BOJ, of course, meets later on this week. Talking a little bit more about Hong Kong.
Yeah.
And obviously we've been dealing with a lot of mourning and the like here over the weekend. The government has moved to stamp out mounting public anger after the city's deadliest fire in nearly 8 decades. The last week's disaster in the Tai Po district killed at least 146 people. Let's get to our Min Min Lo, our China correspondent, with the latest so far.
Yeah, the latest was, if you remember, last week I was at this distribution center that was started by volunteers, and we heard that on Saturday, the authorities had told them to clear out of the square. The government is kind of taking over that donation drive and taking it online, saying that they will make it more efficient. But you got to take this in context of the other things happening as well, because the Office for National Security had put out a warning against anybody trying to use this fire to stoke unrest and endanger national security. property, and already they had arrested 3 people on those grounds, including an unidentified volunteer, a former district councillor, Kenneth Cheong, as well as one man who started an online petition making 4 demands of the government, including taking care of the victims, taking accountability for what happened, starting an independent commission of inquiry, and an Instagram page that raised the 4 demands had now been taken down. So certainly it seems like that line between public grief and public anger is thinning, and perhaps the government is worried that I guess you could consider it a mass gathering of people at the distribution center. They're worried that maybe that could spiral into something that is out of control.
Do we have new details on how the fire started?
Yes, so last week the government gave a press conference and they said that the fire started with the green mesh, and they now say that based on preliminary testing, the mesh did in fact meet regulatory standards when it comes to fire resistance, and they're now putting the blame on the styrofoam boards that are sealing the windows, saying that that really caused the windows to shatter, which then caused the fire to move inside the building, so it was spreading both outside and inside the buildings. And the fire department explained why they didn't use the helicopter water bomb, saying that that would douse the exterior of the buildings, but at the same time the powerful downdraft will just create more oxygen and fuel the spread of the fire even further. So now there's still speculation about how exactly the fire started. Some people are saying, workers smoking. We still don't know, and an interagency task force has been started to look into the exact cause and also what caused the fire to spread so rapidly.
And we continue to watch, of course, the very touching photos of people lining up and, really putting out flowers and mourning really for the whole weekend. It was quite a show of support that we continue to see.
Yeah, we saw thousands of people lining up to give flowers. There were people holding up signs to say that they are giving out free hugs. And of course, the Hong Kong government has declared 3 days of public mourning, right? And they had set up condolence points across the city. And we saw just really raw sort of devastation at the site, because there was this place where family members could go in to identify the dead based on photos, and you see this terrible procession of people coming out just looking completely anguished. And I think the past couple of days, these people had been very dazed and very shocked, and you could very well over the first couple of days be quite at a loss. And, looking at the distribution center there, within 72 hours, it's gone. By the time you sort of, are clear about, okay, maybe I need to go get some supplies, those things are just gone by now. And clearly it seems like, I think many of the volunteers are also upset that their goodwill is now being scrutinized for other, political intentions as well.
What's next to watch here today, in the next few days?
Well, I think the next few days, of course, we're entering a political period, right? Because we have the Legislative Council election taking place. That is, John Lee said he will announce if it's going to be delayed. But as far as we understand, based on sources, they understand that it is still going to take place on Sunday. So the public campaigning has been suspended for about a week. They are likely to resume on Thursday. And obviously, this incident is going to cast a shadow over the elections, because this is the second election that will take place under the Patriots-only sort of electoral system that Beijing has imposed. And of course, the government and Beijing in particular will be watching for how the election is going to take place. And of course, we have seen police security really ramped up at the site near the fire as well. And I think this is something that will definitely be casting a shadow over the elections.
Min, thanks for the update. Yeah, we're just coming off a challenging weekend. It's extremely hard to just try and not be connected to the news.
Yeah, and actually I also wanted to point out that there has been reports that show that these residents were complaining about these fire hazards early as last year. And the Department of Labour did acknowledge in a statement that they had wrongly dismissed some of these concerns and initially said that there wasn't any fire safety law governing scaffolding. But eventually later on they said that the materials actually met the standards, citing documents from the contractors, but now they have increased the number of arrests to 11, including more contractors and consultants of different companies as well.
Min.
Yeah.
Thank you. Min with an update there of the developments over the weekend into where we are right now. Monday, when you look at this story as we make our way, of course, into into a new week here. You're watching the China Show. Plenty more ahead. You're watching the China Show, counting down to the open of your cash markets. Hang Seng Index slightly higher, A50 futures also to the upside here. Some strength coming through in the Chinese currency, which isn't new. In fact, at 706 right now, you have to do a weekly, do a 200-day moving average, and you see we're sitting right at about that level. We also just happen to be sitting on a level. I think it's a Fibbo retracement from the trough to peak in the last 5 years or so. We're right at that 50% retracement level. As far as that trade is concerned, it's just to say, of course, it's really been a weak dollar story and maybe a bit across these equity markets. Not all, because we're looking at some earnings reaction too coming through today.
The Fed is in a blackout period now, so certainly we're not going to get much more in terms of the Fed uncertainty. But as Dave mentioned, right, it's nearly priced in that they're going to cut this month. So certainly that's going to be the key thing to watch here in terms of your mainland markets. This is what the open for your Monday morning is looking like here. We continue to see some moderate gains here for the CSI 300. We're up about 1/3 of 1%. We're watching, of course, some of the commodities, as Dave mentioned there. Silver is at a record high. Copper certainly has seen those gains in some of these mainland futures. We're up about 2.5% for copper as well. And we're focusing a little bit more on what happens when it comes to the tech space, given what we saw with those Meituan earnings. Certainly last week, I think it was Alibaba, which had a bit more of the spotlight back on them after announcing, of course, this Quell app, and then this whole kind of new smart glasses that revived the stock a little bit. You have the boards to see how Hong Kong is doing. Capricorn, meanwhile, is down about 0.8% in terms of the chip space here this morning. But today is really about Meituan. And we are seeing, when it comes to the sell side, they are continuing to slash their price targets for the stock. The likes of Goldman, Citi, and the like. Meituan is, there you go, down 2.5% here. We're now at that 100 level, recording their first loss since 2022. They mentioned the fourth quarter guidance was also going to be weak as well. So they still see losses when it comes to, of course, the e-commerce business and the like. Alibaba is doing okay, continue to extend those gains here. Tencent is doing okay as well. So we'll get a take from Barclays on the whole tech sector just coming up. But as Eva Yi from UBS told us, right, tech is going to be that key driver for this equity rally here for next year, despite the weak macro data, right? PMI numbers that we saw, an 8th straight month of contraction when it comes to manufacturing. That certainly is one thing. The non-services side also didn't look that good either, also in contraction. So the macros are getting weaker. But then again, we also get the private gauge coming out in just a few minutes. We'll break those once you do. In terms of the consumption space, we're focusing on that. There was a lot of optimism last week about this consumption plan that could lift the likes of the Pop Marts. You know, these collectible dolls could help boost the consumption space in some ways. Pop Mart continues to head higher there. But the price has been, or at least the stock has been cut to a hold from Deutsche Bank with a price target around 228. So just similar current levels right now. Watching CATL, those 8 shares have been raised to overweight at JP Morgan. Baidu is not doing too much. Weibo not really either. But we're still focusing on Vanke. So they basically have pledged their entire stake in its management unit to a state backer, Shenzhen Metro Group as well. So this is what we're hearing in terms of part of this framework that allows Shenzhen Metro to demand collateral or pledges from Vanke for its loan support. The stock not doing a whole lot here today.
Wan Wo, or Wan Wu, as the character. You know, it actually showed up in the news. It showed up in markets last week. I think the high-yield offshore gauge had its worst week in over 2 years last week on aggregate. So we'll see how those bonds trade going into the session today. But that's also to say that we're continuing to track the story. And as Yvonne is pointing out, right, the company pledging all of the shares it holds in a listed property management unit. So Shenzhen Metro, Trista is here with us to take us to the latest. What do we know about the specific move coming out of the company?
So this move to pledge the share is not surprising because we already mentioned that it's part of framework that allow Shenzhen Metro, its biggest shareholder, to ask for collateral pledge for its loan support. And then we also already see Vanke started to pledge its share on this property management listed company starting from February this year. So the move to pledge its share is not surprising at all, but it definitely underscored that Shenzhen Shenzhen Metro, its biggest shareholder, is definitely tightening its financing terms, and you can never, take the support from its biggest shareholder for granted right now.
Okay, what are we expected this week from Vanke, if anything?
Yeah, of course, we are waiting for the bond extension details, and we are waiting for it to land maybe as early as this morning. So I think that's planned. Everyone, the whole market is watching for that, because that will set a stage about how Vanke will deal with its yuan bond moving forward, and that's the key thing we are watching. And then for next week, Vanke will have a meeting with its bondholder onshore to discuss about the yuan bond extension proposal. And if they cannot get the support, which is a bit unlikely, but if they cannot get the support, it will be a default.
All right. Trista, thank you. Trista Luo there, our China credit reporter, on the latest when it comes to Vanke. So lots to look ahead to as early as today, as she signaled there. We're also seeing, what we didn't see was, the
Not yet, though.
Not yet.
Yeah.
Usually this time around, this during the end of the month, is when you get that, the private gauge of the property data out of the biggest kind of developers in China. We didn't get that yesterday. We're already in December 1st, so we're still waiting for what that means. But our very own Christy Hung says this only adds the uncertainty of what the November print would look like, and she foresees that could actually be a pretty weak number.
Yeah, and again, that's not to say it won't come out, but it's usually out at the last
end of the month.
End of the month,
at least.
And, so we'll continue to track our headlines once we have more information, but we'll fuel uncertainty, according to Christy. Still with us here on set for some final thoughts, Eva Yi, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. Are there opportunities within the consumption space in China that you think, are we throwing everything out with the bathwater?
Within consumption, we actually like new consumption theme. The popular stove, the popular
I think
toy.
we should one of those
we all know, right?
Yeah.
It has corrected a lot. I think I remember now it's talking about 20-something times for a PER, and earnings growth is 25% CAGR. When I look at the stock, yes, I mean, the domestic growth is important, but in fact, their growth in overseas, people might have neglected. It actually have been progressing very well. Some of your friends in US and Europe probably were telling you that people lined up for their toys at the shop. So I think this will be an important element that will support the growth of the stock or the company in the coming, particularly in 2026 or 2027, because the margins from selling in overseas actually is a lot higher compared to selling in China. Somehow, be able to market at a much higher
charging them
ASP.
more.
Oh, I didn't know that. How do you look at 2026 then? I mean, it seems like this year was all about valuations. That's what really kind of led to this rally.
Yes.
How critical will earnings be this next year?
Well, let's talk about the tech sector. Because of these subsidies, and you talk about one of the companies having lost, next year, because of this low base, 2026, our tech earnings expect to be over 35% growth. This is a bit of low base.
Okay.
And also because within the Hang Seng Tech, it also includes the EVs and also the semi.
Yeah.
So they do have a bit of, earnings growth. But in terms of broader market, we expect 12 to 13%. So earnings growth will be from this year, I think 2%, 3% for us overall China. Next year, 13%. So the earnings need to come into place, answering your questions. Obviously, valuation has corrected lately because of people taking profit, people worry about the Main Street. But we do expect both. Valuation now, it's, I think, slightly at par to historical average. So we have earnings growth coming in.
That's right.
With maybe a little bit of earnings re-rating. But, I mean, the easy upside was this year because it's just re-rating. Remember, the beginning of the year, we were at high or low teens in terms of over China.
Yes.
Now we are at 17 times. That easy move, has done.
Yeah, and I think the earnings have to start.
Yes.
So the title of the report is Escape Velocity. Question mark still. You're not convinced yet that is the team at UBS not convinced that
I think
the equity
there
market
are
hasn't...
different pockets that will be moving around. And as I said, I mean, when people would really focus on one stock in one sector, you'll be surprised that there will be different pockets of development moving. So you got to change. You got to sort of monitor the situation. For example, we like gold a lot. We still like gold, but it has moved. So we need to think about why you need to have that as a hedging. 5% of people's portfolio need to be in gold, because the geopolitical situation. Yes, I know trade truce is here, but it doesn't mean that it's all peace. Right? We all understand they're going to meet 4 times next year, the 2 big leaders, but the discussion is not ended here. It's just going to be continued, and i.e. the volatility will still be here.
Yeah, in terms of the risks you guys highlight, if AI progress slows, if inflation picks up again, or if debt problems resurface, which out of the 3 concerns you the most?
I think would be the AI. Because people put a high hope at the moment.
And what's the initial indication that that's slowing? Is that a lower capex number? Is it a blowing up of one of the higher multiple?
Monetization.
Okay.
Monetization will be the key. And at the moment, we have been hearing that, like for example, the China way of AI is a lot cheaper than U.S. type of AI.
Yeah.
Obviously, with these 2 different regions, I don't think they would eventually. They won't. There will be 2 systems. But would there be any arbitrage between them eventually? We don't know. I think that's something that we need to understand. But it's not probably a 2026 story. It might be 2027 story.
Okay. Hold on thought. We have a little bit more news when it comes to Vanke. So apparently one of those yuan bonds has been halted once again after a price drop here. So we'll continue to track this one. This is the 3.64% yuan bond here. Obviously we'll continue to watch. I mean, today is when we possibly get the details of this kind of yuan bond extension, right? So certainly we'll see. The markets are still pressing the sell button as we speak. Eva, may I get your take on this? I mean, everyone is saying that the property market is still struggling. Maybe it will have to eventually force the government to implement some stimulus. Should we expect any sort of stimulus in the property sector?
Well, I think there is a high chance that I think the market is talking about it like mortgage subsidy, which obviously probably partly will be coming from the government and maybe partly from banks. But net, this is more of a. I don't think it can continue for the entire mortgage term, right, to be honest. But maybe a year or 2 years. But it will help. That having said that, we still expect 2026 in terms of China property market and in terms of prices in particular and volumes still will continue to correct.
Markets don't like surprises, disruption. But if it's a known risk like this, we've been here for several years now.
Yes.
Do you think if this continues into next year, as you've just outlined for us there, does that cause? Do you see any way that this can cause a disruption in the equity market specifically to the rally that we're seeing, or can those 2 things continue to coexist like they did this year?
Put it that way: if it turn around and stabilize, this will be the best story for China consumption. Right? I mean, this is at the moment, like we don't need it to go back to the good old days. We only need it to stabilize. Okay. So when the October data coming in to be a lot weaker and then the sales continue to, sort of decline, even in tier 1 cities, that actually makes people really worry because at the end of the day, they still have, 1 or 2 or even 3 properties. They haven't been able to sell it. If majority of people haven't, that will still affect their sentiments, right? I think this is crucial for consumption.
Eva, great to have you here this hour. Eva Yi, head of Greater China Equities at UBS Global Wealth Management Chief Investment Office. Of course, we'll leave you with a look how markets are doing here right now. We are seeing when it comes to, Greater China markets doing quite well. Hang Seng is up 0.6%, CSI 300 above that 4,500 level here. This is Bloomberg. All right. right, we just want to recap the PMI numbers that we got over the weekend here. And yeah, it wasn't pretty. We're talking about an 8th straight month of contraction for the manufacturing floor here. That is a record losing streak, of course, and non-manufacturing also looking a bit softer. We're at 49.5, also signaling contraction as well. So yeah, we got the RatingDog, the private gauge, coming out any second now, Dave.
It has come out, and the reading is not good. It missed forecasts quite substantially. We also are getting a sub 50 handle on the RatingDog PMI. This is again also for the same month, 49.9, and we're back below 50 for the first time in several months. So clearly we've hit a cyclical headwind in this economy as we close out the year here.
Let's get the take from Eva Yi, chief economist at Huatai Securities. She joins us from Beijing here this morning. Eva, it seems like the weakness of the economy, we're seeing it reflected in these numbers here right now. What do you think is contributing to these numbers?
Yeah, November manufacturing PMI only upticked 20 bips to 49.2. This is a pretty weak recovery, I would say. It's in line, won't call it strong. I think a lot of it was seasonal recovery because October has many less working days. This October, people take time off, take a 12-day holiday during the national holiday. So I think market was expecting a little stronger recovery. Didn't happen. I think a few things are contributing to it. First of all, we do see the fiscal expenditure growth going into the year end. They're probably saving some bullets for next year. So fourth quarter this year, the sequential momentum wasn't as strong as the first half of the year in terms of fiscal spending, but also some other disruptions or temporary factors as well. Because November this year, we only have 20 working days, and in the past, it's usually in the past 10 years, the average number of working days in November is 21 to 22 days. So that could have been a small reason that PMI was on the weaker side. Lastly, there was continued anti-evolution efforts on the industry level and local government level, and that could have contributed it too, because we are seeing price signals on the margin going better than the volume signals. For example, we do see an uptick in finished product price, as well as a more notable pickup in input prices.
Eva, David here, do I take it then, based on your last thought there, that we're going into next year and many in the market are underappreciating the inflation impulse that's starting to come through? And do we see that, I guess, as far as corporate earnings are concerned? How are you viewing that whole scenario?
I would describe it as a moderate recovery, but it's been ongoing for a while, actually. If you look at the corporate balance sheet, both from the listed company perspective as well as from the MBS industrial corporate financial data, which is monthly, the financial data, we are seeing cash flow in terms of cash plus current assets as a percentage slowly recovering from fourth quarter of last year, and account receivable days starting to decline from the first quarter of this year. And we are seeing, including some of the property companies, we are seeing the balance sheet contraction for some of the problematic sectors starting to slow down or even stop. But this is, I think, attributable to the local government debt swap program and increased fiscal impulse from fourth quarter of last year that improved the cash flow. So from the PPI perspective, it has been narrowing, and the narrowing has speeded up after anti-evolution kicked off in July this year. We don't see it as a sort of a very steep recovery as we saw in 2015 and 16 with supply side reform. Nevertheless, there should be some kind of, we do see the profitability trend slowly being on the mend for corporate sector.
And we've talked about, it's a K-shaped economy, right? Where you have AI is still looking like a bright spot. You have exports that are still resilient. Equity markets are doing okay, pretty well this year. But then again, I look at what the property side is doing. I look at what consumption is doing, and that still continues to be struggling. What do policymakers do, and how do they address this sort of K-shaped economy now?
Yeah, I think the K-shaped economy, or sometimes we call it the two-speed economy, is sort of a global phenomenon now after COVID, and with the takeoff of AI, U.S., China, a lot of the larger economy are all experience sort of the change in income distribution. And if you look at what's going to happen next year, first of all, I do think the government is taking note of another leg down in property sector in terms of primary market transaction volume, as well as first-tier city price catching down in the past couple of months. So we do expect some kind of policy coming through in terms of targeted maybe mortgage rate subsidy or cut, or on a city level. They do call it one city, one policy. So on the city level, we are seeing some cities giving out a monetary subsidy for home purchase. And we do expect different cities, given their different circumstances, also tailor-make some of the incentives for home buyers as well. And going into next year, in the 15th five-year plan, we do see more emphasis on consumption growth, and that could probably lead to more in terms of government incentive of boosting service consumption and not the large ticket items we've seen in the past year.
Yeah, I was actually going to ask you whether or not, in what form do you think we'll still see the consumer-oriented subsidies, but I think you answered the question. Final one for you. We've seen the Chinese currency on very strong footing recently, in fact, 706 now. Do you think something's changed as far as the currency bias is concerned, Eva? To what do you put the strength in the currency?
Well, I do see the narrative shifting for the RMB, and now we're almost seeing sort of a reval, or appreciation expectation around the RMB. And the RMB, from a valuation perspective and competitive perspective, you look at China's exports, and even especially if you do product by product, it is extremely competitive. It is on the low end of valuation. We've seen a very long stretch of real RMB depreciation, the longest one actually since the 1990s, or actually the largest one in terms of magnitude since the 1990s. Extremely competitive. We're just looking for a catalyst. So the catalyst going into the year end could be the US dollar softening a little bit from 100 to 99.5. Now the rate cut is back in the into play. The rate cut is back into the play. Also, towards the year end, people are expecting maybe some of the conversion back into RMB for Chinese New Year in terms of cash flow as well. So there's some catalyst brewing, but we do see the appreciation speeding up onwards. Sorry.
Eva, sorry, we're out of time. Thank you so much, though, for that. Chief Economist at Huatai Securities. Plenty more ahead. This is The China Show.
Welcome back to the China Show. Here's a look at the HSI half hour into the session, and we are hovering on those session highs here, seeing gains about 1%. This rally seems to have gained a bit more traction here in the last couple of minutes, so certainly that is a good way to start your Monday morning. We're checking some of these sort of the gold, the precious metals, and the like that continue to rally. Copper is also doing very well here this morning. Yeah,
it was a really big move on Friday into the weekend, and you know what? It actually continued going into this morning, right? So silver, I think one of the first things I saw on late Friday was really this at about this level, right? So record on that, record on copper. I believe we should also be the highest, at least my data tells me we're highest since 1999 if we close at this level on copper in Shanghai. The reason I phrase it that way, I think intraday back about a month and a half ago, October 10, we were trading at 91,000 very briefly on copper. That's just to say it's done well, and of course, some of the equity market names tied to those names, including Jiangxi Copper, is up 11%, the most there in about 4 years.
Yeah, there's two things going on there, right? So copper prices is one, but then there has been this ongoing sort of takeover bid from the company when it comes to Seoul Gold. So last week there were reports that Seoul Gold rejected this takeover proposal. What we're hearing from the company now is that it's still at an informal stage, that bid here. So that's what maybe you are seeing, but uncertain whether the company will make a formal offer of Seoul Gold.
Okay, let's have a look at Japanese assets. We're looking at that too. In the last hour, we heard from the governor. A hawkish tone, nothing new, but clearly, I guess, in many ways, very hawkish based on some of the headlines that come through. Before that, even the two-year yield opened, if I'm not mistaken, right below, but we're now trading above 1% for the first time since 2008. We're going the opposite way as far as equity market goes. Dollar yen strengthened following those dropped following the comments coming through out of Governor Ueda. Just to say, it's a big week as far as monetary policy is concerned.
Yeah, December 19th. I have to correct myself. That's when the next BOJ meeting is. So the speculation is rampant once again. Let's bring in Ruth Carson, our chief FX and rates correspondent, on the yen popping higher in the back of Ueda's comments, as David mentioned. How are investors positioning on the yen here?
Yeah, absolutely. So macro-driven, so sensitive at the moment to everything that Ueda is signaling to the markets. And how are investors reading what's been coming out? The door is open to a rate hike in a couple of weeks. And if we look at what swaps are indicating, 60-odd% chance of a hike in December. When you look at January, that number goes up to 90%. So clearly, rate hike is on, according to the macro traders out there. And what does that bode for the yen? It's a positive. It's a positive. We know that dollar yen has been hovering around the 156 mark. It's obviously broken down now to below 156, 155 odd. And again, is there room for this to continue? Well, if swap markets are to be believed, absolutely. We do see probably a stronger yen trading ahead.
Ruth, related to the story, JGB is also seeing some pain. I think we referenced the two-year yield now has a 1% handle. I don't think we've seen that in somewhat of a, let's call it a generation or close to it, at least here. What are bond investors signaling there as far as that melt up in yields?
Yeah, look, it's echoing a similar story that we're seeing in the yen. Rate hikes, generally good for a currency, in this case the yen. Rate hikes, generally not so good for the policy-sensitive front end of curves in the country. And in this case, definitely for the two-year JGB yield, which, as you correctly pointed out, David, it is, around the highest levels that we've seen since the 2008 financial crisis. Again, investors are weighing whether this has room to run. And depending on who you speak to in markets, the widowmaker trade, shorting JGBs, has been very, very lucrative, particularly for the hedge funds out there that have been doing, curve trades, as they call them. So definitely see the space, lots of opportunity to run.
And Ruth, there's been a lot in terms of, speculation is running on who's going to be the next Fed chair, right? And we heard from President Trump saying he has made his pick on who's going to lead the Federal Reserve. I just want to take a listen, too, on the back of course, Kevin Hassett, who is seen as the likely contender, and what he has to say about it.
We had a great Treasury auction, interest rates went down. And so I think that the American people could expect President Trump to pick somebody who's going to help them, have cheaper car loans and easier access to mortgages at lower rates. And that's what we saw in the market response.
Are you Fed chair, or are you any closer on that right now?
I know who I'm going to pick. Yeah.
Oh, tell me, Kevin Hassett.
I'm not telling you.
Leaving us all kind of
hanging,
really. I know, but I'm not going to tell you. Do you think that's what's attributing to all the dollar weakness we've seen, Ruth?
It is definitely one of the factors that would be influencing dollar and treasuries trading right now. It is very much talked about. It's hard to come into your desk one day without someone going, have you heard about who the latest Fed chair would be? So definitely an influence there. We know that Hassett is very much, people see him as a Trump pick. There are issues around, speculation around central bank independence and also the rates trajectory of the US. So definitely a close space to watch. Yes, it is an influencing factor on the dollar, particularly in the short term.
Ruth, thank you. Ruth Carson there in Singapore for us. Yeah, it's the quiet period, of course, ahead of the Fed decision. But when you look at pricing, it doesn't seem that they'll need further nudging. In fact, we priced 102%, so more than a full rate cut coming through, of course, in about, 10 days or so. Right. From that story, dollar weakness across markets on Monday, Governor Ueda, in fact, I believe just wrapping up that live speech out of Nagoya, talking about how, well, they'll move if and when the economy tells them that it's wise to move. That's just also to say the weakness in the currency might actually be adding or helping them as far as the inflation boost is concerned. FX could be a factor to boost inflation, according there to the BOJ governor. Okay, we will take a short break, and we will see you on the other side of it. This is Bloomberg.
All right, we'll talk about those Meituan earnings in just a bit, but you take a look at when it comes to this whole campaign to rein in price wars and blunt deflation has really done little to lift third quarter earnings as Chinese stocks extend their losses into a second month. Let's bring in Sang-Mi Cha, our Asia equities reporter, on what her team has been kind of really seeing in terms of this anti-involution campaign. It's not really helping all sectors, it seems, at this point.
No, not really. And it's the same wordings that we have heard in August, the irrational competition in the domestic market that's been weighing down on their earnings and the stock price, of course. It's the worst performing stock among Hang Seng Tech index this year. The stock is down about 30% YTD. So it speaks for itself, right? So the price war that we are seeing, it's really hit the peers as well. Alibaba, JD.com, they're all hit for the precisely same reason. There's a one pie and everybody's trying to take share of all of this. Morningstar actually says that Meituan from over 70% of the value that they had in on-demand and food delivery market, they see about 55% shrinking of their market value by 2027. And for Alibaba, they see an upgrade from 21% to 40%. So we're going to be seeing more of a duopoly market in the delivery business.
Okay. Sang-Mi, thank you so much. Sang-Mi Cha there, out of course, our Asia equities reporter, taking us through the last of the big earnings that come through and maybe how we're set up for next year. It just brings to mind something that Eva Yi out of UBS, who joined us about 40 minutes back, mentioned about earnings next year, right? So as a group, Hang Seng Tech, because you have the platform companies, you have some EVs, and you have some chip makers there because of the very low base this year. I think it was John, your question around valuation re-rating.
Yeah.
And she said it's going to be likely a 30% improvement in earnings next year. A lot of that is down to maybe the low base effect.
Yeah.
So just keep it in mind as we try and extrapolate multiples and where they should be going into next year. On that very specific note, that wasn't just random. Let's bring in Jiong Shao, China tech analyst at Barclays. Joining us, I believe, his Sunday evening. Thank you so much, by the way, sir, for staying up, and we appreciate the time. Good morning from the Asia Pacific. Nice to see you, sir. We're done with earnings, China Tech. Just before we get granular, any broad takeaways on a sector level?
Good morning. First off, thank you for having me on. There's a lot to talk about, obviously, for the sector, for the earnings. It's oftentimes hard to generalize. But I think the earnings season has been pretty good since the fourth quarter last year. That being said, though, we are clearly seeing some signs of some headwinds ahead for 2026. And we can go into details a bit later. But just for the earnings season itself, I think most companies reported pretty good earnings, right? If you look at Tencent, Alibaba, the two tech leaders for the group had a pretty good earnings, especially I would say Tencent. Alibaba had a very strong AI cloud growth. But not every single company had a great results. For example, Meituan, you were just talking about the company earlier in the program. We have had an underway rating on the company over the last 3 years for multiple reasons. We can go into all the nuances in terms of the competition, the outlook for the food delivery business later on. If you want to dig deeper in that area.
I think let's go there because you mentioned about the nuances, right? Some have talked about how we've seen the worst of the price wars in the e-commerce space. Are you seeing any signs of that improving next year?
So we could be both right for having seen the worst in Q3, where Meituan lost about, roughly speaking, $2 billion in a single quarter. But the loss probably will only gradually improve going forward. The problem for Meituan, however, is not so much about near term, because the company used to have almost like a monopoly position in the industry, right? 80% market share, 25% operating margin. But as soon as, firstly, JD wanted to get into the industry, get into the business, and then Alibaba decided to come back strong to get back its lost market share over the last 5 years. Now the industry dynamic has changed completely. Now Alibaba has, roughly speaking, 40-50% market share, just a little bit below Meituan's. But the issue for Meituan is that Alibaba never needs to make any money in food delivery. They'll be happy just to break even because they make money from the other core e-commerce transactions from these customers. But that's the only business for Meituan, more or less, so they have to make money. So when you have a number 2 player, a very close to number 2 player, doesn't need to make any money, then you got a problem. Your margin will never go back to the way it was a couple of years ago.
Okay, so let me just ask an open-ended question. You mentioned it's not a short-term issue for Meituan, it's long-term. What does the future look like for a pure play like Meituan? And I'll leave that open-ended, how you want to answer that question.
Sure, thank you, David. So we have always said, okay, what's going to stop all the leading players to be more rational in discounting, subsidizing, coupon? We have said the only way these players will become more rational is when they believe no matter what they do, their market share will not go up. So then the next question becomes, what's the equilibrium market share among the 3 players? So this is just A scenario, doesn't have to be Z scenario. Perhaps Meituan has 50% market share. Alibaba has 40% market share. JD has 10% market share. Let's just assume everybody is kind of happy with this, or at least cannot do too much about it. When that happens, every player should scale back on their discounting. But that does not solve the fundamental problem for Meituan, is because even when that stabilizes, Meituan's profitability or its margin will never go back to 25%, ever. Because, by the way, before Alibaba came back to the market strong, Meituan made more money than any other food delivery company in the whole world, not just in China. So Meituan's probably over-earned in the food delivery business until last year, or until early this year, rather. But even in an equilibrium state, again, Meituan's ability to make money is structurally lowered.
Yeah. And whether there are still the remaining moats to their business, that's going to be a key question longer term, Jiong Shao, as you mentioned. I want to get your take on the whole Alibaba story, though, because you mentioned, right, Alibaba doesn't need to make money in food delivery to do well, because you have all this, AI full stack sort of capabilities that the company has with this new Quinn app now. is that going to be continuing the case where investors can kind of look past weak earnings and really just focus on the AI potential around Alibaba and some of these big tech names?
For the time being, for sure, right? Alibaba CEO said on their public call, they simply do not see that there is an AI bubble for the next couple of years from the pipeline they have, which probably is true. Now, that being said, globally, there's ongoing debate about whether or not which inning, using sort of baseball term, which inning are we in a potential AI bubble? And I think for me, who personally went through the dot-com bubble back in the days, is that at the end of the day, the success and adoption of AI industry or any industry is really depending on two groups, enterprises and consumers. End of story. There's no third group you can think of. They do not exist, right? But for enterprises, they need to move beyond initial piloting, trialing, and play around. They really need to adopt AI as part of the business processes. As we all know, China hasn't had a software industry, or a big software industry per se, or enterprise software in particular, or SaaS industry. So it's not an easy task to convince these enterprises to give you the money to buy your product to help their business processes. They might as well go out hire another 100 engineers to do what the AI does for it. For the consumer, same thing. In China, it's impossible to charge consumers for a fee for running an app like a ChatGPT. You pay them $20, $30, $50, depends on which version. And that market exists in America, but it probably doesn't exist in China. So they need to address that problem. If not in 2026, it needs to be addressed in 2027 before we all get super excited about AI.
Yeah, Jiong Shao, you being in New York is I would say the best position to look at both sides of the tech argument. And a lot of people that we talk to talk about how China's pursuing this different model for AI. And well, I guess my question for you is the concept of hyperscalers. Do you think that exists in China? And do you think we will get, or we should get, the same amount of eye-popping capex we're getting out of some of the U.S. companies? Do you think that's in the future for Chinese tech, or is it going to be different? Or is that not in the future because they're pursuing a different model?
Right. If you look at a very high level, no doubt, U.S. and China are two world superpowers in AI, of course, in other things as well, but in AI in particular. But there will be some differences. We at Barclays, we don't think the hyperscaler model works in China, in particular, actually for the exact reason I just mentioned. Because the reason they are hyperscalers here in the US is because US has always had a very large enterprise software industry. And then later on has had a very large SaaS, software as a service industry, right? You have Salesforce running and many other enterprise SaaS software running on these hyperscalers. But then on the other side of the ocean, China never has had a software or SaaS, so there wasn't really no need for hyperscalers, right? Before China needs to have a hyperscaler or hyperscaler industry, they really need to have the enterprises, big and small, to adopt AI to start. And I think that would be the first bottleneck or challenge for the Chinese AI players to overcome. So I doubt you're going to see this $100 billion, $50 billion annual capex number from any of these Chinese internet companies. In fact, as you may recall, in Tencent's 3Q results, their capex was actually slightly lower than expected and was lower than even a year ago.
Jiong Shao, before we go, just given your coverage, tell us some more. What are the top picks then around the AI story? How do we position moving on from here?
So there are several key players for AI in the US, as you guys know. Some private companies like OpenAI and Anthropic, but there are public companies such as Google seems to have come from behind now, is really, really making strides. But in China, in our view, Alibaba, without a doubt, is the largest AI player with a full stack going from consumer end and to the variety of the models. I think Chinese enterprises, there's one thing works for them to adopt AI vis-a-vis the US enterprises because the cost is much, much lower in China than in the US. In fact, it's on average, we have written a bunch of the report, 90% lower. And Chinese electricity, by the way, that's a key bottleneck for any kind of AI build-up, is much lower and widely available. So China has that advantage working for them, but the disadvantage, as I said, it hasn't had a SaaS and a software industry. But beyond AI, actually, you were talking about outlook for 2026. We think the biggest issue we may be facing in 26 for all the tech companies and maybe for a lot of other companies as well, is that in 2025, we have had the government subsidies, right? The trading subsidies and all the other tax breaks you're getting. Even if you renew that for 26, you no longer have that bump up effect anymore. So we already start to see companies like JD, like Xiaomi, start to show some weakness in the 3Q results because of that lapping effect.
Jiong Shao, fantastic. Thank you so much for joining us. Please let us know next time you're here in the region. Jiong Shao there, China tech analyst at Barclays, joining us out of New York this evening. We're going to leave you with a look at how markets are doing here right now. Take a look when it comes to gains there. We're off some of the initial highs when it comes to the Hang Seng, but we're up still about 165 points as well. HS Tech catching a slight bid here this morning. The CSI 300 also up about 15. This is Bloomberg.
Right, a brief preview of some key events. Obviously not a fully exhaustive list of things to watch. If I had to pick a couple of things out, we'll talk about trade in a moment. Also, decent numbers there. You have, of course, PC on Friday. And, of course, given all the moves we're seeing in the JGB market, you have two key auctions there. You have a 10 on Tuesday, and you have a 30-year yield coming through on Thursday as well. Apart from that, rate decisions, RBI, and of course the Fed's not included, but we'll talk more about the Fed certainly over the coming days or so as we approach that one.
And in terms of the data front, that's certainly front and center here today. Of course, when it came to Asia, I think the export side of things from Korea still looked pretty strong, but it really was the PMI data out of China over the weekend and this morning from the private gauge RatingDog, all signaling contraction, right? So 49.2 for manufacturing there. It's an 8th straight month of contraction. That is a record losing streak there. And the private gauge also sub 50, Dave. Yeah,
RatingDog coming in, quite a big miss. They're sub 50. And of course, Asia data too also coming out this morning. A whole slew of numbers coming through out of Japan and also others. Do we have the graphic? I promise you we'll show you them. Oh, here we go. This is Bloomberg.
Well, Hong Kong is mourning the victims of the city's deadliest fire in almost 80 years. Now, this was a scene on Sunday outside the park next to Wong Fu Court in the New Territories town of Tai Po. At least 146 people were killed in the fire. Hong Kong officials held 3 minutes of silence for the victims on Saturday. Condolence points have been set up in all of the city's 18 districts for members of the public to sign books and pay their respect to the victims and survivors.
Good evening, ladies and gentlemen. Please rise and join me. A minute of silence.
And veteran Hong Kong actor Chow Yun-fat also held a moment of silence for the victims at the 2025 Mama Awards ceremony here in Hong Kong. The music awards ceremony went ahead, but organizers canceled the earlier red carpet event out of consideration for those affected by the fire. But it was certainly a very touching moment for those that were in there. Dave.
Touching and trying to underscore the challenging last few days you've had going into a week, and we're continuing to be on top of the story here. Let's bring in our team here on set with us in Hong Kong. Min Min Lo, our China correspondent, alongside our Bloomberg Intelligence senior analyst Stephen Lam. Min Min, let's start with you. Why don't you get us started here?
Yeah, I think the weekend just gave us a bit of time to digest what happened, and there has been an outpouring of grief, an outpouring of support. You look at the special fund that the government has set up. Initially, the government put in 300 million Hong Kong dollars. It has now ballooned to about 1.2 billion Hong Kong dollars. A lot of it coming from private donations from members of the public, and that's why now the government said that they are increasing the amount of living allowance that they're giving to the victims. Initially, they're handing out 10,000 Hong Kong dollars per family. They are giving out an additional 50,000 Hong Kong dollars to the families as well, and they will continue to provide longer-term support. But certainly over the weekend, we saw long queues at the site of the fire. But I think what was different over the weekend was that the distribution center that I was at last week has now been completely cleared of volunteers because the authorities told them to clear out. They are taking over the operations. They're moving it online in order to create efficiency. But at the same time, the Office of National Security had also issued warnings against anyone trying to use this fire to incite unrest. And the National Security Police had arrested 3 people, including an unnamed volunteer, as well as a former district councillor, Kenneth Chong, and also someone who started an online petition calling for the government to do more for the victims.
And it just goes to show really the sensitivity really around this issue right now.
Yeah, it really speaks to some of the underlying tensions that are simmering, especially given all the changes that Hong Kong has gone through over the past years with the imposition of the national security law and perhaps that public gathering of many people, organizing different goods. There is some fear, it seems, from the government that that could spill over into something more serious, especially when sometimes the line between grief and anger is not that clear, right? And especially given that a lot of new facts had emerged, and it seems like there are lapses on many different parties, not just the engineering companies, but also it turns out that many of these residents had put in complaints to the Department of Labor as early as 2024. And the Department of Labor now says they acknowledge that they had mistakenly dismissed some of these concerns. At the time, they said there were no laws governing fire safety when it comes to the scaffolding. Eventually, they said that the materials used were in compliance, were compliant with Hong Kong rules, citing the documents submitted by the contractors. But obviously now there is a multi-agency task force that is now investigating the cause of the fire. Why is it spreading so quickly? Because there are obviously things that shouldn't be there, like the styrofoam boards sealing the windows, the tarpaulin sheets that are also non-compliant as well.
Do we have a better sense of the timeline authorities will need to conduct their investigations across these multiple fronts for us to be able to figure out who was responsible, and maybe separately who is liable to?
Yes, so the authorities told us they would need 3 to 4 weeks to complete the investigation, but currently they have already arrested 11 people in conjunction with this case, including consultants, including subcontractors related to the scaffolding company, including an intermediary as well. And, many parties are involved because now they're saying that the mesh initially the government said that the speed of the fire was spreading unusually fast on the mesh, but now they're saying with the initial testing that actually the mesh had met with compliance standards, and it's the styrofoam boards. And in one building, they found the styrofoam boards on every single floor, on the floors of the elevators as well. And when it's sealing the windows, it really caused the windows to shatter, and it caused the fire to move in from the exterior of the buildings to inside the buildings, and that really sped up the speed of the fire as well.
Min Min, thank you, Min Min. Great coverage and really bringing us the latest on what's really been going on and what's on the ground, too, as well. We can't move away from the human element to all of this, but certainly we have to talk a little bit more about the next steps here when it comes to really kind of getting, when it comes to insurance claims and the like here, and it's certainly going to be a very lengthy process, it seems. And, when you take a look at what Stephen Lam from Bloomberg Intelligence has written about, and he says this is really likely going to be one of the costliest residential fires to the insurance industry. Let's bring Stephen in here right now. Tell us a bit more about how well equipped do you think these insurance companies are in fulfilling these claims?
Right, Yvonne, David. So yeah, no words can really describe, how severe the situation is, and it is very hard to put dollars and cents to matters like these, tragedy. But if we look at what we have right now, financially, I think it's very, very known that China Taiping is the lead underwriter of the major insurance policies that protects the building and the contractors. The dollars and cents would be about Hong Kong 2.6 billion. That is the coverage that I think most media is widely understood. Now, there's a lot of intricacies in terms of who's liable for what and who can claim that amount. So, to answer your first question, the company itself, it's financially sound. It's a state-owned company. It has been around in Hong Kong and in mainland China for a very, very long time. So we're very confident that the ability to make claims is definitely there. Another sort of reassurance, it's relating to reinsurance. It's a very standard practice that every time a direct insurer underwrites contracts like these sort of sum amount, they would have a panel of reinsurance companies. It could be several, and sometimes it could be more than 10. So it is going to be borne by the whole insurance market, not just in Hong Kong, but also globally. Okay. But if we take a step back, yes, as a single event, very concentrated, the size and scope is just huge because, if you look at Hong Kong typhoons like Mancoot, that one cost Hong Kong about $3 billion. And this is only, the complex in here we're talking about. Yeah.
I mean, it's important to your point to distinguish who eventually is liable for what. And, you look at something like several towers that were burned. How do we look at who is responsible for the actual property, the asset? Individually, too, you have homeowners needing to, and it's a practice, I'm not sure how widespread it is in Hong Kong, to insure your own property. And, of course, also separately, things like life insurance, which is a separate thing. So how do we look at those two other facets?
Yes, so let me break this down for the team here and to our audience. It's a very standard practice that the owner's corporation, I'm talking about private properties in here, probably to most of the properties in Hong Kong, that they would take out a policy called property all risk. Okay, so this is the main coverage that for the property that we're looking after. So that's worth about 2 billion Hong Kong dollars. Okay. So that would cover everything structure-wise, common areas. Anything within your unit, it's not covered under that. Any bodily injuries, deaths, it's not covered under that. Okay. So for those things, if we start with the residents, who can they go after and whatnot? Yeah. The coverage that they're actually is available for them right now from contractors or from the property, it's what we call the third-party liability. Now, unfortunately, based on our understanding, going through these contracts, that coverage is very...
What's that contract? Just so our viewers are...
Right. So this is the policy for the contractor all risk. And then we have a copy of what the building takes out. Right. Every year, they would spend about 100-ish Hong Kong dollars to buy a property all risk policy. It's a very standard practice for property of this size. So going back to your point, for people, right, the deaths and the injuries and the post-trauma experience, loss of income and all that, that's likely going to be a long-drawn process. Now, I think what we're grateful about is the quick reaction of the society. That's why, going back to Minmin's point, the donations is extremely important because that's already readily available. Now, in terms of the claim speed, I would imagine due to the severity of this incident, it's all hands on deck. The insurance companies, the banks, the court, the legal system, all parties will prioritize these sort of claims. I think another thing to think about is, not just a third-party liability. The contractor also takes out something called employee compensation, and then they also have a third-party liability policies. So those are the areas that the residents will go after.
Yeah.
Of course, for their own life insurance policy.
I was going to say, we had a conversation about this last week. This is, it's an old building. It's mostly retirees.
Mm-hmm.
It's public housing in some ways. How many people do you think about in this whole complex are actually home insured or actually have home insurance?
Okay, so very good question. Although we don't have the official stats in here, but based on our understanding, it is a very common practice when you take out a mortgage, the bank will ask you to take out a fire insurance.
Yes.
So that is worth the amount of the mortgage. It's very tricky because...
Is it mortgage insurance too, or is it different from mortgage insurance?
That's basically the mortgage insurance.
Okay, just to clarify terms and concepts.
Right. It's essentially anything happened to the property so that the bank can make sure that if this person or this family cannot afford to pay the mortgage, at least the bank is protected, okay? And also protect the mortgage, the person who lend the money, borrowed the money, because they don't need to be liable to pay back, right? So that's one. That's very common. The home content insurance, like loss of property, your laptops, your TVs and whatnot, that penetration is not high. So we're probably thinking about less than 20%, if not lower, okay? And especially...
Wait, this is different from home insurance, just for clarity of concept.
That's different from home insurance, yeah. Well, this is different from fire insurance.
From fire insurance, okay.
Yeah. Sometimes you can buy them as a bundle as well. Yeah. And of course, I would imagine for the life part, so the life insurance, it's very common that senior folks, they buy a lot of savings insurance, okay? So those money will be paid back, okay? Unfortunately, usually these savings policies, they don't have a high death benefit. The amount is usually a little bit small, okay? If you think about the pure life protection policies, that is not a common policy that people purchase. Usually it's attached to an investment product or like a long-term savings product. Yeah.
Stephen, thank you. Thank you for that. Stephen Lam there, our Bloomberg Intelligence senior analyst. And just to bookend really what's been a terrible few days, and certainly will continue to stay on top of the story here, we'll leave you with some live pictures as Hong Kong mourns the lives lost in the city's deadliest fire in almost 80 years. Live pictures here out of Hong Kong this Monday morning. This is Bloomberg. Welcome back. You're watching The China Show. To recap some earlier breaking news, you can read about that bottom of your screen. So some Rosewood assets could be up for sale on the back of the broader story of the group looking to shore up liquidity. Shares are up 0.6%. For more clarity on what we've learned, let's bring in our conglomerates reporter Shirley Zhao here with us on set to tell us exactly about what's happening.
So we learned from sources that Henry Cheng, the current patriarch of the Jiong family, which is the controlling shareholder of New World, is seeking to sell properties in the family's luxury hotel group, Rosewood. And we learned from sources that representatives for Mr. Cheng have approached some companies for a potential sale of the assets. We also understand that the discussions were preliminary and there could still be changes.
And tell us a bit more about the significance of this one, because they have attempted to divest some of the family's assets before, right? When you talk about K11, we've had you on the show talking about this. But the fact that they're even considering Rosewood, what does that tell us?
Yeah, so this is pretty significant, although it remains to be seen what the Jiong family plans to do exactly with the proceeds for the potential sale. It comes at a time when the family's flagship property developer, New World, is facing a lot of debt problem. And Rosewood Hotel holds some of the family's highest quality assets. For example, Rosewood Hong Kong Hotel has just won the top spot of the world's 50 best hotel. And the market value of Rosewood Hong Kong is about 15.9 billion Hong Kong dollars, according to some roadshow documentations that we've seen. So depending on what assets that Mr. Cheng is seeking to sell under the Rosewood Hotel Group, the sale could be pretty significant. And the Cheng family is also seeking other measures to try to provide extra liquidity for New World. For example, the family is still talking to third-party investors on a potential capital injection into New World. And the family is also seeking to sell a bunch of New World assets, including their investment properties in mainland China, as well as a mega mall next to Hong Kong's international airport. And they're still discussing with the airport authority about potential solutions for the mall as well.
11 Skies. I didn't mean K11. I'm talking about 11 Skies, the airport one. That was the big one that we've been talking about.
Yes, the one beside the airport.
Yeah.
Okay. Shirley, thank you so much. Shirley Zhao there. Just to update you on some other corporate news that we're tracking this morning. So, an update, of course, of the massive story on Friday. The data center that supports the CME Group derivatives exchange says it has bolstered its backup cooling capacity that's after overheating and sparked a 10-hour outage on Friday that roiled global markets. Cyrus One owns the facility in suburban of Aurora. That's about 80 kilometers from Chicago. Now, it says stable and secure operations have been restored with additional redundancy added to cooling systems. Right, South Korean authorities are investigating a data leak at Huang that exposed some 33 million accounts. Yonhap News says the alleged hacker, a Chinese national who previously worked at the U.S.-listed online retailer, police began investigating after a formal complaint from Huang, which says it became aware of the leaks on November 18th. Now, Micron will reportedly spend $9.6 billion, that's US dollars, to build a plant in western Japan making memory chips for AI applications. The Nikkei newspaper says Micron wants to diversify its advanced chip production outside Taiwan and plans for shipments from 2028. Now, the report says the factory will make high bandwidth memory chips, a key component for working with AI processors from the likes of NVIDIA.
Well, airlines worldwide are scrambling to update software on the Airbus A320. This is, of course, the most widely flown commercial jet in history. And carriers say they've rushed through an emergency fix after Airbus stunned the industry on Friday, calling for a so-called precautionary fleet action. Let's get to our Asia Global Business Managing Editor, Rachel Cheng. She's with us here right now. This really kind of sparked this kind of frantic rush. Tell us, what's the update now? Has everything been fixed, resolved?
It's mostly been resolved, but indeed it was a weekend of massive travel chaos. It was a real shock, really, to the industry. It was a late-night Friday thing, and essentially we had the regulators saying you have to do this software upgrade before the next flight. And this is a jet that is one of the most commonly used in the passenger industry. The fix would affect about 6,000 aircraft, and that's almost, over half of what Airbus supplies to the industry overall. So it was a big deal. We had lots of hundreds of canceled flights, delayed flights. So it was a really tough weekend coming out of that U.S. Thanksgiving holiday. Luckily, the fix takes mostly just a 2 to 3 hour sort of like software upgrade for most of these jets, but there are about 1,000 older aircraft that will require a complete wholesale hardware upgrade, and so that would still be ongoing right now.
Did we see any disruptions to that? Any flight disruptions as a result of that?
We saw a lot of flight disruptions over the weekend because a lot of these airlines, had to delay or cancel a lot of these flights just to get those fixes into play. So luckily this time Airbus caught it, and it was a relatively simple fix. But, the issue really brings up a lot of questions because it's very mysterious. Essentially what they said was intense solar radiation corrupted some of the software that's used to maintain flight controls. Now, we really don't know anything about solar radiation, and the fact that it could really be causing a loss of control, is something that the experts and, of course, Airbus themselves are going to really be trying to dig into over the weeks and months. And, it's just one of those situations where you realize there's so many unknowns. And that could impact so many people.
On a fleet that is so widely used as well. All right, Rachel, thank you for an update there. Rachel Cheng, our Asia Global Business Managing Editor. And of course, coming out, we'll be speaking to one of the largest operators of A320s in the world. That is Air Asia CEO Tony Fernandez speaking to Bloomberg exclusively on Insight with Haslinda Ahmed.
The result actually confirmed that the AI developments of China is actually exceed people's expectation. What I meant is not about capex. I think the U.S. tech developments clearly telling you that it's not about how much you spend. It's about how much you eventually can generate in terms of revenue. So if you look at the time lag between investments versus monetization, China actually have been doing better than that of U.S. if I would really have to be strictly comparing.
But the issue for Meituan is that Alibaba never needs to make any money in food delivery. They'll be happy just to break even because they make money from the other core e-commerce transactions from these customers. But that's the only business for Meituan, more or less, so they have to make money. So when you have a number 2 player, a very close to number 2 player, doesn't need to make any money, then you got a problem. Your margin will never go back to the way it was a couple of years ago.
Just some of our guests on shows this Monday talking about tech earnings, which is a theme we're continuing to track as we look at the rally across these markets, modest rally going into a fresh trading week.
Yeah, it's an interesting take too from the taking stock about, you know, when you're talking about anti-involution and the like, you're not really seeing that really play out in earnings. Except for the material sector, right? There's still parts of this economy and the industries where you are still seeing quite a bit of price competition. I think e-commerce is certainly one of them.
Yeah, and we saw that with quite literally a net loss coming through, right, out of one of the big ones as well. We'll leave you with a look at these markets, and we'll see you all tomorrow.